Good day, ladies and gentlemen. My name is Midas Faljimo, the team leader of Plan B Express. Just to show you a basic, simple, old, but profitable strategy we use in trading. And if you want to join our community, very simple. And of course, when you're in our community, pay attention to basic things. First rule is that learn how to trade one instrument per time. Second rule is to learn how to trade one instrument per time. Second rule is 5 fingers trading strategy. What is 5 fingers? And then third, price actions, support and resistance strategy are major thing we pay attention on. Now, looking at the instrument, of course, you want to look at. I discovered something people can tell you that you don't need daily bias, especially if you are a day trader or a scalper. But to an extent, I discovered that the better you have an idea of the bias of the day, the more strategic and the more better trade you will have. On that note, you want to first of all look at the market bias. And of course, I'm not going into detail because this is not a training. Those of you who want to, take proper training for trading, you go enroll in a basic mastery trading course in Forex, in synthetics, and in crypto. But I'll just show you the pattern we use in trading. It can look old, primitive, but I think it wins trade. So if I find my market, of course, this majorly can just be like a pullback, but you can always still find an entry to your pullback to make profit. Exactly what I'm looking. Because if you look at it right now, this market could actually get supported on your key level and all of that. Okay. So assuming I come into the market for the day and I have picked an instrument that I want to follow up, right? If I pick an instrument I want to follow up, let's say, so let's just take Euro USD that we are. So let's go to 4 hours. If you want to do intraday traders. So let's go to 4 hours as an intraday trader. All right. Intraday trader, you go to 4 hours, for instance. And of course, you see I've marked this. This is like an uptrend, right? But as if the market was going to have a major pullback. So this is an internal, external liquidity. So I'm going to mark it like a support, all right? And then another thing I'm going to mark is up there here, right? Ordinarily, if you are the type that come to market early, you will have short this market early because here will have been where you will mark. So, but let's mark this now. We have marked this and we have marked this on 4 hours. So every external liquidity I have or external structure I have on 4 hours is actually on 15 minutes. I'm going to pull the trigger, right? So look at all of these points. These are liquidity area. So can I still mark this? Well, if you have time, but for me, it's quite far. Where will market journey to this point? So, but nevertheless, we've just marked them and then maybe relevant place. Probably even this can do. I'm going to mark this. So because looking at the market to probably grab it. Remember what you are looking for is support and resistance strategy. But of course, for you to be effective in support and resistant trading strategy, you must learn how to identify liquidity area, right? If you don't learn how to understand liquidity area, your support and resistance strategy may not be very effective. You get that? Okay, so let's quickly go. Here we go very fast to 15-minute time frame. Now, getting into 15-minute time frame, remember I said if you had come earlier to the market, so this what will have happened, you will have marked this point as a liquidity area. And as soon as the market going to that point, you want to be looking for a selling opportunity, taking your stop loss above because you find this. But good and fine, when you have marked this at this point, now what you are waiting for you is that, okay, let this market, we are on short on this market already. We short this market. So you are waiting for this market to actually break this point and probably retest. Now, but to an extent, being that this market is like potentially an uptrend, you are looking for the market to return back here and grab this liquidity. So take note. So if you grab this liquidity, then and price action now setting, you grab this liquidity, which here too can grab this. So if you grab this liquidity, you want to now see your price action, which is like candle pattern now, then to find a buying position. So when you meet some markets that had gone far, it's better you avoid it because you cannot find a proper setup or entry that will be more protective for you. And that's why we always recommend when you meet a market that had gone beyond your place or where you should have found an entry, you just allow it to be. Because you are looking at liquidity here, and then this is a key level, and at the same time, this is another liquidity here. So you will have allowed this guy to actually come down, grab this liquidity or bounce on this point, right? And then to find a buy. So, but for now, we probably cannot, you probably that you are late to an extent. And even if you extend to 5 minutes, it's still almost the same structure that you are looking at right now, right? So let's leave this guy alone, and then we're going to return back to another instrument. So let's look at this. Oh, perhaps I was on this with. So let's go to 4 hours. Okay, so if we go to 4 hours, invariably, so let me take off all of these. Probably those were the places I marked before. So let's go to 4 hours, right? So here is 4 hours. So what are we looking at? So 4 hours, because look at the daily time frame for this guy. This market actually came from here, which looked bearish, right? So let's look at the structure. This is a low, this is a high, this is a low, this is a high, this is a low, this is a high, and a low, a high. So this is a double top. And then this point has been broken. But it's not valid for you to say, okay, this is totally bear market or bearish as it were. So, but this is what you're now looking for. Now, ordinarily, you've marked this point and created a graph of liquidity. So let's look at where is the immediate point I need to look at first of all, right? I'm going to look at this point. Okay, I'm going to look at this point, right? I'm just looking for liquidity areas and all of that. I'm going to look at this point, even though this one is a bit far. So probably I'm going to look at this point. All right. So here we go. And then we still look at this point. Okay. And down here. Okay. So if that's the case, because presently this is where the market is, so perhaps if we even mark it, still more closer to this point. So that area probably you want to be looking at. So this is almost in consonant with this. If not, we ought to mark this point. All right, so let's go to 15-minute time frame right now. All right, so we're in 15-minute time frame. So in 15-minute time frame, the market had actually climbed down at this point. And then in 15-minute time frame, it's already showing that this market is bearish on 15-minute time frame. Remember where the market move on to. So if you're saying the market is bearish, almost creating like a double bottom here. So what are we looking for? Very simple, right? Now, this neither grab liquidity nor whatever, but this is what it has done. It pull out of this point and then create another low. So you actually looking at something like a what? A double bottom. And so you want the neckline to be broken. So what you do is simple. So that means you are looking at price action, which is the chart pattern price action. You want a break over this and retested of that, then you want to be finding a buy. Remember, it was an uptrend and not it only pulled back massively. So you want to be looking for a buy for this guy, UJ as it were. So did I find any entry position here? The answer is no. So if I'm unable to get more good entry position in this type of market, maybe I will just wait for New York session. Maybe I've missed out of the timing for the London section. These are very simple stuff, right? So, or a liquidity come to be grabbed here and I will still find my entry. So you can see the logic and strategic way of trading. We're already short here and then we're waiting. Okay, maybe I should pick gold this time around because we said we find a selling position on gold. Yeah, you can see it on 15 minutes. We short gold already. And then, so if you go to 5 minutes, probably, but we said this will have been the best point. But why do we actually short gold? Remember, went on 5 minutes. Sometimes even the same gold, you can use 15 minutes to grab your external and internal liquidity, right? Now, this is just a major swing for now, has not confirmed, right? So this is where we now come to. Let's take this guy here. Let's just take off all of this. So please, trading is not gambling, it's more strategic. You should have an idea of why you chose to do what you do, not that you just do it, randomly. So it's not a random kind of a thing. So remember, I think this is the first one we did here. And so we said we have a major liquidity area here, right? So so another one you probably could find, so be here. Right, this is right. So then you have another one here. So this type of trade now, you're going to take it in 1 minute. But don't get it twisted that this guy is bullish, right? So, but you want to look for money. And I've told you, I said I've shot from here and looking at stop loss above here, whatever thing it bring, let it bring. Okay. And okay, so let's go this way. Let's go to 1 minute. All right, so here is 1 minute. So what actually happened in 1 minute? So this is a high, and that's the highest though. So okay, this is a liquidity zone. I'm not very sure that because when these were rejected on 1 minute, remember this selling is not yet valid unless we take out this. If you have not taken out this, the selling is not yet valid. It's still very dangerous. So, but before then, you already have found, right? Before then, you already have found this. And this is gold. A small move in gold is a massive earning. So for scalper, you will have find some short, but as long as gold has not broken this, has flap up to this, is the problem. So you can see it's rallying up back again, and probably when you get rejected, you want to short. But to be very conservative and really intraday trader, you have to see that this guy break this point before you can be finding a short. So, but for me, sniper entry trader, I'll just little position in to find a short. So let me just use the example of a short here. Remember, we'll mark this, we'll say until we see some reaction. So let me short here. This is good. Okay, so I've short gold, right? So, but now what should I do? I've short gold and I need to put my stop loss. So putting my stop loss, but when it gold break this below here, I will add more positions. And this is the warning I normally give to people when you are trading. You have to calculate how many amount you afford to put into the market. You not divide it to number of entry you can take. So let's click to adjust our stop loss and take profit. So where should be our stop loss? We'll say 3133 or 3134. So let's go there. 3134. 3134. That's about $70. So where's my take profit? So my take profit is 3098. Okay? 3098 or something. Yes, 3098. And that's where it got started from today. 145. Okay. So I click OK. So I've short gold, right? And waiting for the reaction, whatever thing it plays out. That's exactly what we have done. And so 3018 was say my target. 3098. Okay, so that means this point here. But like I've told you, whatever thing you are doing now is deadly risky because you have no confirmation of market structure shift for you to have entered into this market. So it's deadly risky. All right, so you have to understand that eventually, when it down break this point, you are adding more position and that make more sense. All right, so look at our short. Good. Look at our short on Euro USD. For anyone who was on short on Euro USD now in our ecosystem, they are actually doing fine right now, right? So I'm going to tell them congratulations because Euro USD is playing out as we push. Let me see. Okay, approaching TP1. Okay, so we just go there, tell them. Okay, approaching TP1, Euro USD. Okay, so that's one of the things we need to understand. So, like I said, we have seen a break here now. So that means we continue to target sweeping of these liquidity areas. If we swept this and market continue, then after. So sometime, so for, okay, another thing to help you. So now let's look at our oscillator and you see MACD. Now another thing that we even had a kind of, okay, we call this one divergence. Oh, well, really. Okay, so we actually had something very significant here. I always say that you can, to help yourself in your trading, like 5 minute time frame, you can put your uh, moving average, moving average, moving average, simple moving average, SMA, and that should be right. Just put it for you. That should be 50 simple moving average. 50 simple moving average. Okay? Simple 50 moving average. Okay? So it can be any color, anyone want it to be red is okay. 50 simple moving average, SMA. Simple. Right? Uh-oh. Okay? So now, why are you having this? Probably to just guide you, right? Probably to just guide you, can help you to find an entry when you are below 50 moving average, you are actually shorting. So You can see when you come here, navigate through all of these, and you this is 5 minutes, so market pullback here. So you probably wanted to say, okay, let you find a long here, but of course there was no reason to find a long here. Then this is multiple weeks. Multiple weeks is signs of uh, turning over the market, and so multiple weeks at 50 moving average, and so you will have short here, right? And your stop loss probably above, even or above this point, and of course targeting this down here. That's another thing that the 50 moving average do for you. And so let's look at it. You can see now I said the market you were doing here is still very, very risky. Can you see now? With the 50 moving average you are having here, gold is still what? An uptrend. Okay. Because selling position or selling volumes is very scant, and even your MACD is still above the zero level. So these are confluences. If you want to know much about these confluences, you probably have to enroll with us in Plan B Express. All right. If you look at Bitcoin, yeah, it's trying to stay consistent above 50 moving average, right? Now, so this pullback now, you'll have found an entry and put a stop loss here, for instance. But this market, though, we have to still be very conservative. So that is after this engulfing. Okay, so let's say even you have to see the first engulfing. This is supposed to engulf to more than this, probably. So, but because you find a pin bar and you are above 50 moving average, so you are buying and taking your take profit maybe over here, and then your stop loss below this one. And so this is not up to 1:2. Now, sometimes you are looking for 1:2 will not work. You are looking at point to point, liquidity point to another liquidity point. And if it's going to get there, let's say if it gets there, that means it's going to be on this external liquidity of your 5-minute time frame. Are you getting it now? So, but give and take. Am I supposed to take this now? But answer is no. You're supposed to wait to break above this because these are liquidity area. You could grab all of this and continue to sell down. Now, so when you hear about support and resistance, you still need to understand fantastic price actions that will help you a lot to maximize the support and resistance. And all of these points we're pushing now was going to help you to do massive exploit in your trading activities. Does that make sense? You can see this guy now it's above 50 moving average, so you probably want to find across this, and then you want to be actually buying. Now, not that you are using 50 moving average to buy, but to give you an idea, are we actually back up or we are still down? And you can see that here again. Look at USD. So now let's look at it. Perhaps if you are in consonant with your strategy and you have been able to mark and understand your price actions, and so price action, we'll talk about price action, market structure first, right? So now, if that's the case, you've seen your 250 moving average, right? You see your MACD cross and all of that. Now, at this end, anything here, because it's below the zero line of MACD, so that is we are down, and of course, the 50 moving average, the market is below it. So everything you are looking for is a pullback and a short. So meaning market rally up and then getting to 50 moving average, you are shorting. Now you don't get confused here that, okay, look at it as cross here. Why don't I buy? So now look at your MACD. Fine, that's cross here. So, but equally, you want to look at something that's something like divergence here on 5 minutes. How? Let's look at it. Okay. Is it actually a divergence? This is not a known one, right? So, but you see a bullish, and then the market continue to go down, perhaps. So now the point is that you're trying to get here is that you, as a support and resistance trader, do you know that you have made money here while others have not made? Can tell you why and where did you actually make the money? You made the money here because we that trade support and resistance will still do this. We'll look at this point and then to this point as our support. And what we want market to drive into that point and then return. Some more conservative trader wait for it to grab the, but some of us who can risk averse, we just, once he grab this, or either he grab the liquidity and then engulf, we just enter. And entering here will have been this here, and then to look at excuse me, stop loss here, and that will have completed our own. And sometimes you are targeting where you equally mark over here. But let's say you are not targeting that. So 1:2, you are already almost 1:3 if you're actually targeting here. So no scalper are super fast and all of that. Now the market got there and a rejection. Remember, that's why you mark all this before you step down to lower time frame. This is a rejection, massive one. Then you turn the situation around. So most time, while you miss some trade or you equally lose out eventually, even in a beautiful trade, you just wait for nothing. If you want to be a swing trader, don't go to lower time frame, right? So let's say you are now going to be targeting this. This already another almost 1:3. So, but you are targeting here that you may go and bounce here, and then exactly what happened there. So can you see? Now we return back. So give and take within this shortest time, you have traded like 1, 2, 3, and another trade is opening for you again. Why? Right? See, this is another market open for you. Yeah, this is another market open for you here. Look at it. So that is to say, you short the market. Look at this is a price action, though this down higher than this. So, but that's still liquidity graph, and then above the week and 1:2. So 1:2, you are already in a very massive profit here. Yes, already in massive profit. So in a very short time now, it's going to be giving you the profit. So entering late, because now you are above 50 moving average. You are going to be very careful because look at it, the market could get here now and bounce. So imagine if you are now entering at this point or even at this point. So what are you going to be targeting? Your stop loss will be too bogus, and then you'll be targeting too far before you hit your 1:2. Are you seeing it now? What's the chance that this market will return down here? So it's on that note we always tell people to target a particular instrument and work with it so that especially at a given period, so that you don't miss out at every good move of such market. Now remember, we still told you this guy where you enter from was actually wrong. We're still above 50 moving average. So imagine if you have come, probably you understand this. This is a massive pullback. You know, you have marked this. You didn't mark this when the market came there. You mark it ahead of time, and market reacted to those points. So even if you cannot enter market, but for you who understand your support and resistance, you're already in the market. As the market touched that point and rejected that, and if you are not confident enough, you are now saying, okay, let me wait for the market to break the 50 moving average or break and retest this, which makes sense. Break and retest this is your stop loss, and then look at how the market has been doing. So getting up here now, so the best way, a conservative trader, this has to be taken out and react to that, then you are selling. So the sell we sell is a very risky sell. We're only holding our teeth, right? We're only holding our teeth to that. Okay, look at what I just told you. See reaction, because this already above 50 moving average, guy. Yes, here was above moving average, but this was still bending down. But at this point, it's already coughing up and all of that. This is now higher than this. So see what's going to happen. So imagine if you are shorting. So if anyone who short from here and the market start reacting funny, and then he can break even and get out of the market as much as possible. All right. So that's one thing you need to understand when it has to do with this space. This space is fantastic. All right. All right. So look at this guy now. Okay. So what happened? Okay, it got up to this point. Think gets respected this point. So, but can it break this and retest it to continue going up and all of that? That's why you take profit at every liquidity point or the other. So it refused to come down here. Now it's navigating up massively. So what's going to happen? Look at your MACD. Don't worry. The market probably will get to this point and reject again because so though sell volume is reducing, but nevertheless, it's below the zero level. And so you could have it just intimidate you and then continue to go down eventually. Right? So the gold. So remember, we just take small entry and we said the moment the market at least crosses here and crosses here, these are confirmation for us to now find a better and bigger entry. So we are just in $2 profits on this right now. So, right? So that's how you trade, and especially if you are a day trader, take every profit on the table. Don't let the market collect it back. Because you can be smiling to say, oh, this market, okay, look at what this guy is doing. So for people who have short the market from here already in very fantastic profit, right? Of course, that's again what we want when you are entering this market. Don't enter one position or with big lot size. Enter small position, right? More position with small lot size. That make a lot of sense. Okay. So you want to learn more detail how to use all of those strategy. We have a lot of strategy. Then you want to get enrolled with us in Plan B Express basic trading course. And then it's just $500. Give you access to virtually everything. 1 year full free signals. And if it's Forex, you subscribe for. If it's crypto, if it's synthetics, it's the same pattern and strategy we use in maximizing everything. Does that make sense? All right. So thank you very much, everyone. So pay attention, go to the group, pick all those messages and work with them. And it's going to be massive for you. Maximizing profit is one of the biggest things we pay attention to. Thank you very much. My name is Midas Felajimo. You want to chat up with us? You can chat on +234, right? +234 90 470 44 and 998. Take the number again, +234 90 470 44 and 998. Thank you very much, and do have a nice and amazing day ahead. Bye for now.